thanks again for your patience. I'm actually going to share my screen with the new webinar updated one, so it's a little bit easier. Also, I'll answer some questions you guys have. YouTube, I do have a YouTube page. I just started it, guys. Please subscribe to it. It's actually spending lots of money doing some video content, stuff like that. Please subscribe. There's a new video going out once a week. I actually have one going up in like 2 days. It's my guys at Prolix Media. They're a great marketing company. They're doing a lot of cool video stuff for me. So we're going to get into it right now, and I'm going to share my screen with the updated presentation. So background history, this is my 8th year in real estate. Been doing this for a very, very long time. Possibly, good chance you probably see me on a couple billboards. You've seen some of my old webinars in the past. I've been born and raised in Winnipeg. I've been doing this for a very long time. Previously, I was in hospitality and entertainment in Winnipeg. Got out of that, lost a lot of money doing that, got into real estate. It's been a blessing. Learning and meeting people every single day has been great. I'm still learning the game today. I actually learned this strategy from 2 of my clients that taught me it. So 2 of my close friends, Lorenzo and Eric, only 27 years old. They built a huge rental portfolio, and they actually taught me how to do all of this fun stuff. So it's been awesome. I'm still learning every day. And at the same time, I do have other businesses. I am the co-founder of Stock Sharks, a very big company in the States. It's a third-party research company. We have a great community. It's like Wall Street Bets, except the paid membership, $200 a month. Been doing that for a little while. My partner's a genius when it comes to the stock market. And, like I said, each day we're still learning lots. I see some of the Stock Sharks members in this group. Thanks, guys, for showing up. Even though we're not going to talk about stocks today, we're going to stick with real estate. Okay. I'm going to share my screen here, and hopefully, you guys will be able to. And I'll get 2 questions at the end. Okay, guys. So, been doing this for a very, very long time. Then with Stock Sharks, I started another company called Canadian Islamic Wealth. It's a wealth management company for Muslims, not only Muslims. It's ethical investing. So investments in not including alcohol, not including marijuana, not including guns, not including pork, et cetera, et cetera. So ethical investing, social responsibility investing. We do specialize with the Muslim clientele all across Canada. We started this company about 2 years ago. I'm not the finance guy. That's my partner, Jesse. So if you are interested in any of these businesses, I will get you in touch with my partners who are actually the smart ones when it comes to this. I am more so just the real estate guy. So I'm going to keep it going. So, oops, sorry, guys. Why I left my previous background, I lost a lot of money. That's a good question, Omar. So when I hit about 30 years old, I actually lost about $1 million, actually. So realized I didn't want to deal with leases, didn't want to deal with low margin businesses. And I got into real estate with not much overhead, no partners, which was another thing, and no big accounts payables. Like I said, I'm still learning. I think real estate, I think any business, it takes a long, long time to learn it all. And I don't know it all. I stick with residential real estate. I've done a lot of commercial stuff as well, but I stick with what I know best. So pretty much this one's going to be talking about how to build a multi-million dollar real estate empire in Winnipeg. Okay. I'm going to shoot some links from my YouTube, my social media. You guys can get a hold of me anytime. Over the past couple of days, I haven't been answering my phone. It's been crazy busy. My phone's ringing every 10 minutes. So if you guys can't get a hold of me, text me. I will do my best to get back to you. You can always set up an appointment as well on my website, which I'll send over in a bit. And I pretty much do these webinars just kind of give you guys a little bit of information about real estate, build a relationship through these webinars, especially with COVID going on. And then, of course, if you guys, want to do business with me in the future, whether you're buying, selling, or investing, or you have friends and family that might be interested, that's what I'm here for, to kind of lead the way and guide you as much as possible on what I know. And if I don't know something, I will put you in touch with the right people that can help you and succeed in your ventures. Now, some questions that we answer today is, what is the BRRRR strategy? So BRRRR, BRRRR. How many homes how many times you can buy this using, how many homes you can buy using the strategy, who can lend you money, how much of a down payment you need, and what appraisals you can use. Now, keep in mind, this strategy, I'm keeping it very, very basic. I'm not going to go into multifamily. I'm not going to go into commercial. I'm keeping this as basic as possible, just so you guys understand the simplicity of it. Now, I could do another webinar on the commercial end. I could do another webinar on the multifamily. But I'm just going to keep it as simple as possible. My idea on all these webinars is keeping it simple for you guys to understand, and then from there, if you guys want to talk about more complicated stuff, we could set up a meeting. But why the really one question a lot of people ask is why BRRRR? One thing about BRRRR is it's my favorite long-term wealth strategy. Okay. Once you realize 5 years isn't that long of a long-term investment, you will start analyzing all your moves a lot differently. Okay. So from stock market to even Bitcoin to, I don't even care, NFT, sports cards to real estate. The minute you start holding on to assets for over 5 years, you will see a return. 10 years, you'll see a return. 20 years, you're going to see a gigantic return if you're investing in the right type of assets. Warren Buffett, everybody knows, one of the richest guys in the world. He's pretty much like 95 or something, and he's held on to stocks since he was like 16. So that kind of tells you what you can do. Everyone's trying to get rich quick off something. You randomly hear the stories every now and then about someone who bought a cryptocurrency and made $1 billion. That is not what I'm banking on, and it's a lot, and I'm going to recommend don't bank on it either. 5 years is a short period of time. If you're investing in your 20s, you're going to be, and you're doing this strategy in your 20s, by the time you're 30, 40, you're chilling. And you could build some real value in some assets. And the best thing about this strategy, guys, you could do it across the whole world. Doesn't matter where you're at. It could be in Toronto. It could be in Vancouver. I know a lot of guys across Canada and in the States are in this. Miami. You could do anything you want out there. This strategy works. Obviously, I am from Winnipeg. I know Winnipeg's market. I've been doing this for a while. But like I said, you could use it in any market. Just make sure, the best thing about, these type of assets, you don't even have to sell it. I never sell my investments. I'm probably the most long-term investor you guys will ever meet. I don't even think about selling. I could get an offer right now and I still won't sell it because I'm built that way. What we call diamond hands on Wall Street bets. It's you hold on to these things as long as possible and you will see a good return. So the basics of what is BRRRR, it's basically buy, rehab, rent, refinance, and repeat, or you could call it rehab, renovate. Okay. It's the strategy and framework used by investors to build passive income over time and build a lot of assets. So simply put, here's a quick example. I'm going to go into more examples later. I buy a house for 100K. I put in 20K in renos. My appraisal comes out at 200K. I can borrow 80% of the value. So therefore, it would be $160,000 would be my mortgage. Means I get 40K back on the refi. Now I'm going to go over these numbers later, a little bit more in depth, which you guys will get a copy of this webinar. And from there, you guys can review it. You guys could always come to me. But like I said, I'm keeping it as basic as possible. So how did I get into it? It's kind of funny because I actually was a very short-term investor in my 20s. I just was trying to make the quick buck every second I can. And what happened was I did meet my close friends, and they got into this rental game and taught me. They're the ones who showed me the lenders, showed me the way, and saying, hey, Shiraz, you should really look at this type of investing instead. And it made more sense. And a message here about tax-free, 100%. When you're refinancing, that's a loan. So at the end of the day, you're not paying taxes on it. When you're selling like a flip, which I've talked about in previous webinars, you're paying capital gain tax on those, and that's not fun. Along with staging, and it's not building any wealth. It's very short-term cash. It's similar to trading stocks or trading cryptocurrencies or whatever people are trading these days. It's you buy a stock and then you sell it at a certain point, or cryptocurrency at a certain point. Yeah, sure, you make a little bit of financial gain, but you're not building any equity, which is why, even like I said, a lot of stock guys are in this webinar right now. But I'll preach it all day. Is you're better off buying a Bitcoin or an Apple or Facebook and holding that thing for 10 years and putting a lot of money into it and seeing a longer return in the long run. And whether it's stocks, Bitcoin, or real estate, you could borrow off those assets, which is very important. Instead of selling it to get your money out, you're borrowing, you're refinancing, or you're borrowing it against a stock. So this is all very important. This is how rich people stay rich. They just take loans out on their assets because that's the tax loopholes, especially in the States. So keep that in mind. So the idea is to buy, rehab, or renovate, rent, refinance, or repeat. So I always say this, I preach it every day. The profit is in the buy. So when you're buying is the most key important ingredient. I got a deal this morning. My buddy called me. He said he had a deal on 600 block of boroughs. So to Winnipeg people in this webinar, he wanted 110 grand. He was saying he could get an after repair value for 200,000. I was like, no way in hell you're going to get that. I said 160, and the numbers weren't there to make it work. So you have to know the area. You have to know what you're buying the house for. Now, if I bought that at 80K, I could probably make it work, but which we'll get into a little bit more. So as mentioned, buy is the most important thing in all of this. The profit is in the buy, guys. So definitely take your time. Don't waste your time. Do not get into the point where you're in a hurry to buy something. You need those diamond hands, guys. Like, you need to wait for the right deal. There's a lot of freaking houses out there. So just wait for the time, take your time, be patient. To be honest, I haven't found a deal in a year because the market's been silly. So I, as a realtor who gets all the leads, I'm not even, and it's not only that, my contractors are all slammed. They're all busy. So it's like, I can't even get my contractors into houses right now. So it's a very difficult time to do this. This is the best sellers market in history that I've been a realtor. If you bought a house over a year ago, you're pretty much making bank today across like North America. So it's a great time to be a seller. It's a really shitty time to be a buyer, guys. So you have to look for the right deal. You got to understand the cost of the renovations, the monthly rental expenses, the rental income in that area to make a profit margin. Keep in mind, you have high property taxes, especially in Winnipeg in some areas, right? So you got to keep all those things in consideration. Also, insurance on a rental. It's a lot more money than a basic on your primary residence. You got to keep that in mind. A lot of people always forget these hidden costs, along with maintenance. My houses that I have, there's always some shit breaking. And once a month, a couple of my houses are having issues. And you know what? You have to deal with that, especially with our cold weather, along with the spring thaw or the winter thaw. Like, we have a lot that comes out of the water coming into the basements. We have all these issues, and you want to take care of your tenants, not have them, deal with issues in the future. And, if you have good tenants, you want to take care of that house. So there's a lot of things that go into the buy. Understanding your renovation costs is the big thing. I've been burned multiple times in real estate for my previous businesses, from the restaurants and stuff. But I probably lost good $500,000 in contractors getting burned. So do not cheap out on contractors, guys. This is the best thing I could tell you. I learned this the hard way. For peace of mind, go with the more expensive contractor that's going to get it on time, have 10 guys in there working his ass off and probably working weekends. Don't go for the guy where you're going to save 5 or 10 grand. I'm not a cheap guy. I've never been a cheap guy. I do spend money. I want to build a team. I want to build good trades, good people, and I'm a volume type of guy anyways. I'm not trying to make the quick cash, so I want to make sure everyone's happy. And those are the type of relationships you want to build. It's a different game now than it was 20 years ago. But at the end of the day, like I said, there's a lot of ways to get burned in this, and finding contractors or the right contractors is probably key in this whole thing. Now, I'm going to just keep going. We're going to go into the 70% rule. It's something that I don't really like discussing. So in Vancouver, Toronto, this would make sense. It's the after repair value. Keeping it under 70% after your estimated repair cost. Now, the reason why this isn't as good, and I've talked about this in the past webinar, it isn't as good is because, in Winnipeg, we have different areas. We don't go by per square footage like Toronto and Vancouver does, because pretty much their houses are all selling for the same ridiculous amount. In Winnipeg, we got a few different hoods. We got the south end, that's a lot more. We got the north end, which is a lot less, and then everything in between, right? So you really have to know. In Winnipeg, it's very difficult because we have old houses. We have 1910 builds, 1895 builds, 1950s, 1940s, 1970s, brand new builds. So you have to know the area, the location, what rents you're going to get, and then property taxes are through the roof here too. So, most of my rentals are under 200 grand. Reason being is I want to cash flow, so I don't want to pull out too much. I don't want to eat up too much of the profit margin on property tax. Keep in mind, though, especially on the refinance, it usually works a lot better when the house is at a lower price, because you're getting instead you're taking out a loan to value of 75 to 80%, which we're going to get into more. So if you guys don't understand anything, by the end of this webinar, you guys will understand. So the 70% rule, if you're in Vancouver or Toronto, I would read up on this a little bit more, but in Winnipeg, I would avoid it. I think you just have to know the area you're after, how much that house is going to appraise for, what are the comparables in that area, and take it from there. So the rehab, like as I mentioned, the rehab or the renovation, definitely the most important part here. Now with my rentals, just a heads up. So on a flip, I probably put in nicer stuff because at the end of the day, I'm going to get more money because obviously it's going to be more, it's a quick profit. Now on the rental end, this is the best advice I could give you. Don't go crazy, guys. There's the appraisers, the banks, they're looking for the same thing everyone else is looking for when it comes to rentals. And here are a few things you want to look out for. New windows is huge. Additional bedrooms, updating bathrooms. The more bedrooms, the more bathrooms you have in this house, the higher it's going to appraise. Updated kitchen. Go to IKEA, get a basic kitchen. Shingles are important. Furnace is important. All these little small things. Landscaping won't be as important, even though I have it in the slide, just giving you a heads up, not as important. But the bathrooms, the basement, bedrooms, the bathrooms, the bedrooms, the bathrooms, windows, shingles, furnace, flooring, put vinyl plank in there. Don't do anything crazy. Don't be putting hardwood floors. But one thing that I do is I love putting more bedrooms. So if I have 1,000 or 1,500 square foot house, I'm adding bedrooms to that. That's why I'm walking into the house. Okay, how many more bedrooms can I add? How many more bathrooms can I add? Can I build a suite in the basement? So that's what I do, and that's how you're going to get higher return on your appraisal. And keep in mind, when it comes to windows, you could go basic double pane windows. You don't have to do triple pane windows, even though it costs a little bit less. Do double pane, they're new windows. Appraisers are looking at new windows like that's good. That's good enough. Kitchen, you don't have to do quartz. You don't have to do granite. Just put basic laminate shit right on the counters, and you're good. And, basic cosmetics, paint, stuff like that. So when it comes to this game, do not spend a lot of money on trying to flip the place, making it look great for your portfolio. Because honestly, especially in Winnipeg, there's a lot of shitty tenants out there too, right? So you don't want these tenants to come in, destroy your house. And in some cases, including some of the places I've had, that's occurred. I just had a house on 1455 Logan, great house, rents well, and one of the bedrooms was destroyed. I had to get my guys go in and paint it, and had to change a window because they destroyed the window. So this happens, is very normal. You just gotta understand where you're gonna get the best return on investment in this case. So just a heads up, when I do the BRRRR strategy, my rentals ain't nothing special. When I'm flipping, they're a little bit more special to it. Now, when it comes to rent, this is the next part in the BRRRR strategy. So as mentioned in Winnipeg, it's easy to find tenants. It's pretty much hard to find good tenants. There's things you got to watch out for. I've been burned in my house by university. I put students in there, destroyed it. Now, I'm not saying all students are like that, but I remember when I was 18. And I was, even today at 36, I'm still kind of a messy guy. But at the end of the day, you got to watch out for these things. You got to watch out for the age gap. Even though you might be able to rent out each room for $500 by the university, cash flow really well, it might not be worth it. You're probably better putting a couple seniors in there, not cash flowing as much, and making a little bit of profit per month and hoping that house goes up in appraisal. And that's my strategy. I find good tenants. I don't make as much money per house. That's my strategy. It's always been my strategy. I'm very long-term. I'd rather have these people paying my mortgage and that's it. I'm not trying to make, $500 per house. I'm good with $200-300 per month on per house and not dealing with any headaches, peace of mind, and that's it. There's the QB registry in Winnipeg where you could actually check. It's a law website where you could check if someone's been arrested, lawsuits, stuff like that. Facebook's huge. I look at Facebook all the time when people are trying to become a tenant. I know pretty much everybody here, so one of my friends will have some kind of connection with whoever's out here. So look into that. Go through their pictures, go through their statuses, see what they're tweeting about or their news feed about. Look into that. LinkedIn is something huge, and this is something huge. Don't believe their referrals. They're gonna give you a resume with the referrals, and it's probably their cousins or mom or whatever. I've had situations where I'm about to rent it out and a mom comes in and then I realize she's renting it for kids, and she doesn't even live here. So we've been through all this situation, learned it the hard way. So, you really got to look at your tenants, do as much as you can. And the thing with me, I do have a management company. My buddy Sonny, he's amazing. He runs all my properties for me, including my friends' properties. He takes 10%. At times he takes less. And he deals with all the headaches. I don't even know who my tenants are in most of those properties. And as long as they're paying their rent and that mortgage is going down every month, I am happy. So that's great. That's how I do things. It is very important to find a good management company, find good tenants, and take it from there. And after renting, now, depending on who the lender is, this is the real fun part, is the refinance, guys. This is the most important part of the BRRRR strategy, because you want to pull out your money. So finding a good lender, finding a good appraiser. So depending on where you're getting the money from, where you're getting the refinance from, some lenders have their own appraisers. This is very important. So if you're going through RBC, Scotiabank, CIBC, TD, and you want to refinance your house, they're going to put it in their system. They're going to spit out an appraiser. Appraiser's going to come check up your house. Now, at the end of the day, this is pretty normal. Some credit unions let you do your own appraiser, which I prefer, right? So one thing that I do for my clients, if you guys have rental properties looking to refinance, call me or call your agent. Ask them to send you comparables. And this is the most key thing in all of this, is the comparables in that area, on that house, square footage. I don't know if this next slide has that. No. Yeah, I forgot to add that slide. Sorry, guys. Some things you got to look for: square footage, type of house, either a bungalow, is it a 2-story, is it a 1 level, is it a split level, year built. If it's a 1910, go off comps between 1900 and 1920. And then square footage is huge, give or take 100 square feet, 200 square feet, full basement, no basement, garage, single garage, double garage. So what I usually do is I send out my appraiser about 5 different comps, obviously the highest comps, be like, hey, I want these are the values that I'm looking for. At least he has an idea. A lot of people don't do this. I do it for all my guys, and it definitely makes a huge impact, especially being a seasoned realtor. They're definitely listening to me. This is huge. And from there, obviously, you refinance, you're pulling out majority of the cash you invested, along with the cash that you invested in the rehab or the renovations. That's kind of the goal. And then, repeating this whole process. Now, most of the time, they give it in cash. You could pay off your debts. You could take the money, you could refinance, put it towards your next rental, your next project. Or you could blow all your money in Vegas, which I know a lot of guys have done that too, which is I'm all for. Got a couple questions here. Yeah, condo. I've actually seen people refinance condos lately on the townhouses. Any deal out there, I don't care if it's the North End, I don't care if it's condo, I don't care if it's Vancouver, Toronto, Winnipeg. I don't care if it's in the hood of all hoods. You can refinance anything if you get it at a good price. And a lot of people that are doing this strategy are doing the work themselves, which is huge. So whether you're flipping, building, or getting into the BRRRR strategy, if you're doing the renovations yourself, you're probably going to come out on top every time. Now, you might not be able to do volume like other investors, but you do 1 or 2 a year, you're going to see some significant gains in the next 10 years. In regards, I'm just getting into some questions. Yeah, I'll get you Sonny's number. 10% is his main fee. So there's a good question by Mark. Tax-free also when you refinance. Yeah. When you're refinancing, so some lenders want you to do it within, or some lenders don't allow you to do it for 6 months to a year. There are lenders, especially the credit unions, that will refinance right away. Okay. At times, I bought houses and refinanced them right away, just because I've got them low without touching them, and that's pretty much ideal what you're trying to do. But I like a big project, or I should say, I like a project. And keep in mind, I'm going to show you guys some numbers and kind of go through back and forth with them, but you want to get in and out of these properties as fast as possible to kind of get to the next project, right? Imran, do you see the market slowing down? No, I don't see the market slowing down. Main reason is because Canada lets in a lot of immigrants, and they keep pumping up the real estate market, guys, along with low interest rates. Along with supply issues, the builders aren't getting permits fast enough. Listen, there's so many reasons why this market's going up. Last night I sold a house in Waverly Heights, the highest house in Waverly Heights in history. It's great for me. It's great for the sellers. It's not, I don't see it going down. I think even if they raise rates, and they're going to do a quarter every year or every quarter, whatever they're going to do, it's not going to. I don't think it's slowing down, especially I just don't see it. I think right now Canada's always had high real estate prices. I think it's going to continue to go high. I feel bad anyone is paying $1 million in Kitchener for a side-by-side, along with $800,000 for a condo in Toronto. That's 600 square feet. I don't understand how you guys do that. But there's some good time. There's some good there's some good opportunities in Canada. Saskatoon, Winnipeg still has one of the best rentals. I'm not saying that because I'm here. I think Calgary. I saw the houses in Calgary for $700,000 are nicer than the houses in Winnipeg for $700,000. And obviously you got the boom and bust bubble there with oil. Edmonton as well. So there are still some really good investments. And honestly, even short-term gains in Vancouver, Toronto. If you guys know the market, definitely. I know a lot of normal folks that made a lot of money doing that. So, it's, you know what? At the end of the day, make some money wherever you guys are at. Just find a good property that you're buying below value and you know it's going to go up. I think you're going to be okay. Ajay, short-term rentals, Airbnb. Honestly, I don't know anything about Airbnbs. I stay at them. I love them. They have laundry and kitchen, and it's awesome. But I couldn't tell you much about the business and the management side of things. Winkler or Niverville. I saw a lot of houses in Niverville. I love that area. If I wasn't a realtor, I'd probably be living in Niverville. Don't know anything about Winkler though. I'll get you guys my contact information. Harshpreet, I'll get into the financing, Mark. I actually have some underneath my personal name, some underneath my corp. My corporation, I've talked about in previous webinars that I do pay an extra higher interest rate on that. In regards to having it in my corp, but they don't cap me. Recently, they let me amortize for 30 years too. So I could kind of break that down for you in another day. Omar, South prices. Yeah, everything's pretty crazy in South Winnipeg, but it's still cheap compared to all of Canada. Medea, you know what? I'll go back into down payments. Abdullah, Winnipeg versus Toronto. What do you think return on investment? Honestly, I think short-term Toronto has a better return on investment. I just like Winnipeg as a long-term investment and the fact that you don't need that much cash. But if you have the cash, I'd probably be investing in Toronto or Vancouver. If you have like lots and lots of money, which I don't. And if any of you guys do, you guys are probably living in Toronto already. All right, we'll keep it rolling. So then the next part, once you refinance, you want to repeat. Okay, so you want to go find the next property, or you want to find some cash or outside money. Now, once you build a relationship with the lender and they know what you're doing, they're gonna take care of you because obviously the more money they're giving you, the more money you're making. Now, there's a lot of tax advantages to this, as mentioned. There's one, you build long-term worth. Two, no capital gain because you're not cashing out. Three, this is huge. You could write off a lot of your stuff with your accountant, so talk to him about that. I don't know much. I'm not an accountant, but he does it all for me. And forward, like this is a real long-term wealth. This is how you build wealth. This is not get rich quick. It's, hey, buy a house once a year or once every 2 years, and in 10 years you're straight chilling. Or, pass it off to your kids. When you hit 50, 60. I don't have a pension because I'm a realtor, so this is kind of like what I'm banking on. And with my other stuff that I invest in is pretty high risk. So I use real estate as a hedge against all my risky stuff. So whatever your goals are, just set a plan. A lot of people are okay with 1 or 2 houses. That's still far better than most of the population in the world. So, doing that, it's just a very, most people put their money in a house, keep it for rent, and that's it. I get it. You want to pay your mortgage as fast as possible. Me, I'm kind of on a different scale in regards to that, a completely different aspect. I use debt to my advantage. I always have. I couldn't even tell you how much mortgages I have underneath my name. It's a lot, and it doesn't scare me because this is just how the plan I have in process. And, if there is an exit strategy 20 years from now, I could sell it all. I could sell it as a portfolio, or I could just keep them as a rental, give it to my kids, whatever the case is. So everyone has their own goals. Once you know your goals, then you'll be able to set forth what moves you want to make, whether it is renting or whether it is flipping or whether it is building or whether it is buying Bitcoin or whatever you guys are doing. It just have that goal, have that plan in place and take it from there. I'm looking in Texas now in regards to some opportunities. I'm looking in Regina now, Saskatoon, Calgary as well. But, once again, I don't have the trades there. I don't have the contractors. I don't know the numbers as much. Also, I don't really trust many people out there. So understanding the markets, you have to do your homework or find a realtor that knows what the hell they're doing. So And there are a lot of good realtors. I'm not the only best realtor out there, guys. There's a lot of good realtors out there. A lot of good guys that deal with just investments that have their feet wet in this game. So that's the idea. So that's pretty much the BRRRR strategy, guys. So buy, renovate, rent, refinance, and repeat. That's the goal. That's the concept. It's an awesome concept. It's my favorite by far in real estate. It is by far the fastest and quickest way with the least risk to build wealth. So there's an example here, which like I said, you guys will get a copy of this. So Johnny Crush It, who's crushing it in Austin, Texas, is interested in purchasing a house. So he buys the house for $200K. All right, he put $40K as a down payment, which is normal here too. So 20% down. Some lenders do 25% down, guys. So it's just good. I'm going to keep it basic, 20% down. Takes out a loan for $160K. So his mortgage is 160 G's right now, okay? He spends $10K on rehabbing the house. So he's probably doing the work himself, Mr. Johnny over here. So he probably does the windows. He adds in a washroom. He adds in a bedroom. He probably does the shingles himself. And he somehow miraculously keeps it under 10K, okay? After rentals are completed, property is appraised at 250K. Johnny rents it out $2,500. Now, that doesn't really matter in residential. It will matter in multifamily what the rents are. It's what we call cap rate, which I will go into that in another webinar. Once again, trying to keep it as basic and simple as possible. About a year down the line, Johnny refinances the house, takes out a loan for 75% of the appraised value, which ends up being $187,500. So once again, 75% LTV, loan to value. That's very important to know. That's how much the lender is lending him rent out based on the appraised value, 75%. Some lenders here, 80%, okay? Some lenders, 60, 70%. All depends on lender. But in this case, he's 75%. He then uses his new mortgage is going to be around 187. So it gets rid of the other mortgage, leaving him with $27,500 in his pocket. So $27,500 he refinances, pulls it out, and goes and blows it in Las Vegas. And he continues to have that property, and he continues to rent it out, cash flowing, and he probably will refinance that house in 3 to 5 years and probably blow it in Las Vegas again. So, but that's pretty much a basic process, basic setup. Now, in regards to finding your cash, Hanan left me a voicemail. Text me, Hanan. I haven't. My phone's been going off. It's rang 10 times while we've been sitting here, guys. So your next project could be waiting. So lenders, I put this into previous webinars as well. These are the 3 I use. 20 to 25% down is normal for this type of strategy. So if you're buying a $200,000 house, have 40 grand stacked away. You want to tell the lender that you are going to be fixing and refinancing. That's something I tell them because they're going to get me on an interest only and they're not going to get me in a fixed rate right off the bat. They're going to get me in a variable, them knowing that I'm going to refinance this house by doing rentals. So I tell the lenders that right off the bat. From there, you want the renovation costs as well. So whether you get a home plus improvements or a line of credit for renovations, or you have the renovation costs on the side, definitely keep that to the side because you're going to be spending some money on the house. So let's just say on a $200K house, $40K for the down payment. Let's just say $50K for rentals for shits and giggles. So $90,000 is what you're going to need. Whether you have a line of credit or whatever, you mix and match or you're borrowing the money. Keep in mind this money, the idea is to get this money out on the refinance. Some of these lenders want a 620 credit score. And like I said, personal versus corporate lending, whether you're doing it on your corporation or your personal name, there's going to be options for that. So these credit unions have been great for this process. They let me use my own appraisers. And the banks have been good too. I had a friend just refinanced with RBC and it worked out pretty well with his appraiser. So keep in mind, if you're sitting on houses right now, there's about 100 people in this chat right now. If you're sitting on a house and you want to refinance, you could go to your lender right now. You say, hey, I want some extra cash for Christmas, or I want to get into rental game, or I want to buy some stocks, or I want to buy, I don't know, whatever you want to buy, a new car. You could go to your lender and be like, hey, is there equity in my house? Can I refinance? Is it worth it? Check the interest rates and take it from there. And they'll definitely be happy to give you cash. This is why the 2008 financial crisis pretty much started in the States, because everyone was refinancing their house on crazy values. But we have more strict rules in Canada, and things are actually going pretty good. Now, So refinancing, this is important. Having a good appraiser, like I said, the best thing is having a good appraiser, or it gets spit out by one of the banks. So then you're kind of shit out of luck. But sending that appraiser the comparables that's recently sold in the past 6 months. Look at the comparables, square footage, basement, everything else. Understanding the comparables, finding a solid lender that understands what you're doing. So interest rates and amortization. Recently, I started amortizing my houses over 30 years. So it's taking me longer to pay the mortgage. The bank's making more interest, but I am cash flowing a lot better. And yeah, that's pretty much it. Like I said, I'll refinance 5 years from now and see what my options are then. Maybe I'll amortize it for 15, maybe I'll amortize to 25. A lot of people's dream is paying off their home as fast as possible to live an easy life. Me, I'm doing the exact opposite. I am just taking out more and more loans to buy more and more rental properties. Can I get burned? Possibly. There's a good chance of it that something wrong can go. But at the end of the day, I'm buying way below the average house price. That's something that I do, is buy below the average house price in the city. Make sure you're cash flowing 500, 600, 400 bucks a month. And worst comes to worst, if rates go up, you're now only cash flowing 100 or 200 bucks a month. So getting a fixed rate after the refinance is obviously key. And 5 years from now, when you're up for renewal, you'll have plenty of options. So this strategy does work. I haven't got burned yet, but it can happen. I just don't really see it because there's so much cash flow in each of my properties. Okay. So yeah, these are going to be the pros and cons of this strategy. Like I said, I really, really enjoy this strategy compared to everything out there. It's I just love it. Actually, end of the day, you don't need a lot of money. You can borrow the money, and you can scale it so damn fast that you can build some really, real good wealth. So some pros: potential for returns, building the equity, finding top grade tenants, which is tough to do, and economies of scale, which is the key thing in this whole thing. And I would add in no capital gain tax, because taxes suck, especially in Canada and California. Some cons: expensive loans. The rehab process could be annoying. The waiting period. So some lenders won't do it right off the bat. Like I said, some lenders want a year, some want 6 months. And then appraisal risk. I've had lots of times, where the appraiser comes in a lot lower. And then I call another appraiser and they came in lower, even though I send them the comparables. It's tough at times, especially right now. So keep in mind, and I've noticed this a lot, where the market's booming, but there's still some of these appraisers are still going off the pre-COVID boom, market values. So you kind of have to really send them the comparables to get an idea. And it's hard for an appraiser. I understand it's even hard for realtors right now to value a home because the market's crazy. I sold a house yesterday, like I mentioned, in Waverly Heights for $590,000, the highest house in Waverly Heights. I listed at $499,000. I didn't think I was going to get $590,000 for it. I think that house was worth $540,000, $550,000, $560,000 tops, and someone paid $590,000. I had multiple offers in that price range. So at the end of the day, guys, like, the market is very hard to find a market value right now. I don't care what city you live in. It's just like that, because like I said, I'm hearing Kitchener and Milton, these houses are selling for a crazy amount of money, and Vancouver has always been nuts. So yeah, it's happening across. It's been wild. It's been fun. Congratulations to anyone that owns houses over the past year or two. You guys are up big. I'm going to give you some case studies. This is a little breakdown. So I'm keeping it so simple, guys. I'm not talking about property taxes. I'm not talking about holding costs. I'm not talking about, there are some errors on this because we rushed it, because unfortunately my developer was in Calgary, forgot that he's an hour behind or hour ahead. We're not talking about property taxes, land transfer tax, lawyer fees, etc. So this house, 96 Lansdowne. I actually own this house. I bought it for $146,500, put in about $42,000. My appraisal came out at $227,000. Now, ignore the LTV ratio. After 80%, I was able to get appraisal for $181,000. Okay, so my appraisal came in at $181,000. I was in it for $188,500. Now, this is including lawyer fees, land transfer tax, hydro property taxes, etc. So there's probably another $7,000 in there. But just on this basic basis, I lost $6,900 in the refi, which isn't bad. So pretty much I got this house for $6,900 plus add another $7,000, so $15,000. So I ate $15,000 to buy this house. I'll do that all day. Okay, so and in 5 years he'll come back and entertain refinancing or renewing it. This house is renting out for about $1,750 a month. I added a bedroom in the basement, a bedroom on the main floor, and a bathroom in the basement on this one. Okay, great house, good area, West Kildonan. 619 Alverstone did pretty well on this one. Bought it for $100,000. I bought this one myself, guys, on New Year's Eve. I was pretty much the only one awake that day and woke up and bought this house. My costs were about $55,000, give or take. I think it was a little bit more actually. Appraisal came in at 227, which actually was really high. Just a heads up, like I didn't think it was going to come in that much. My loan to value ratio was at about 181. So once again, not including land transfer tax, the other stuff, walked away around 27,600. Let's take away 10 grand off that just because of the other stuff. 17,600 is walked away with, and I got a house. This is renting out for $1,500 to some great tenants. Okay, Sergeant Park, great area. This house didn't have the basement. The comps were there. I made a quick move. This is before the market kind of boomed, guys. A couple other houses I was involved with. 166 Monroe. Sorry, guys, these are the old pictures. I bought this without looking at it. I should say my client bought this without working. I was very heavily involved in this one. We put in about $65,000. We got an appraised value of $420,000. After everything, it was $16,000, but we probably washed on this one too. Renting out this bad boy for about $2,500, $2,800. Okay. River Heights, obviously hot area, great area. Lot values are around $250,000. We actually completely gutted this house, but yeah, that's pretty much that. Wait, actually, I probably could show you guys. Give me 1 second. I'm sharing my screen, so I gotta just show you some houses. Oh, 1 second, guys. Oh, wait. Never mind. We're going to keep it rolling, guys, because I'm sharing my screen and I'm not really computer savvy. So same thing here. Even though this was a little bit a higher house, keep in mind now you have higher property taxes. Appraisal is going to come out a little bit tougher because now the 20% or the 80% LTV loan to value ratio, you're going to be eating up a lot of money on the appraisal. It's hard to refinance all these houses out, but it'll still make a good investment if you catch them. Here's one that went bad, $300,000, and probably should have sold this one instead. It is rented out. $300,000. We put in about 120 grand. Got burned by a contractor on this one. If he's in the webinar right now, I don't like you. You should probably leave. But we were in it. We got an appraised value of $580,000. So we took about a negative $84,000 hit, give or take, probably a bit more on this one. But it's a gorgeous house. This is one where it's just better to sell and not take on a big project. We did get offers on this, probably sell it. But yeah, that's just one that just didn't go as well, right? So you are eating some money. You still have equity. It's still a great house. You could sell it at any time. But this is currently rented out. We're actually cash flowing pretty well on this. So, at times with the partners, you just eat it and move on to the next one. But yeah, that's pretty much it, guys. I wanted to get into a little bit more, extensive stuff in future webinars. But as mentioned before, I kind of wanted to keep it basic on this one. But yeah, if you guys have any questions, shoot them out right now. I'm gonna should be in personal. So Hanan, 204-291-6772. My email is shirazali@royallepage.ca. Instagram, Winnipeg Real Estate. YouTube as well. You guys can get a hold of me. If I don't, like I said, my phone rings every 5 minutes, guys. It's crazy. So I usually tell people to text. If I can't get a hold of you, one of my guys will call you back within 24 hours if I can't get a hold of you. I got a great team. Some of the best guys in the world are working with me right now. Great, solid team of contractors as well. But yeah, I'm going to give you guys some stuff to book a virtual appointment. Here's the link. Thanks for bear with me on the technical difficulties we had at the beginning. And then I'm going to give you my YouTube. And so if you guys have any questions, let me know. If you have any questions about any other things, previous businesses or other businesses, throw them out here. If you have any questions about the real estate market in general, which has been wild, go crazy, guys. Damn, man. Last time it was a bunch of questions, guys. Hold on a second. Can you guys hear me at all? You guys good? Are we good? Yes. Slow me. Thank you. Stock Sharks for life. Can you guys hear me? We're good. We're good. We're good. We're good. All right. Sorry about that, guys. All right. So yeah, as mentioned, corporation side. Which way is the beach? Slow me. I'm glad you showed up from all the way from Miami to show up to this thing. I appreciate it, man. So a few things. Sorry, guys. I'm literally having the most technical difficulties in my life doing a webinar. I'm not tech savvy and stupid when it comes to this shit. So I appreciate your guys' patience today and for making it work and taking your time and having patience with me. But in regards to, once again, we're talking about the corporate side. Now, Steinbach Credit Union, who I use a lot with my corporation side, they take an extra 1% on the prime interest rate. So let's just say interest rate's 2.4. They take 3.4% on the corporate side of things. And the reason why I eat that is because they don't cap me on houses and they amortize over 30 years. And it's 80% loan to value ratio. So when I'm refinancing, it's 80% loan to value ratio instead of 75 or 70% what other guys that are doing, right? So that's what it is. And I'm amortizing over 30 years, not 25 years. So my cash flow is a lot better on that end. I've been using SCU for a while. I heard Assiniboine is great. And it all depends. If you're building, there's other lenders to use. Sonova has been great in regards to that. When you're flipping, there's Assiniboine's been great for that too. So it all depends on what your strategy and what you're trying to do in regards to the real estate market. So yeah, it all depends. Like I said, and when it comes to the line of credit, they give me a pretty fat line of credit to do the renos, and I just keep the down payment going. That's kind of like my goal in this whole thing, just to build assets, and that's why I eat the interest now. Now in regards to laundromat business, Guggen, don't know anything about it. Honestly, probably sucks. Everyone has a laundry now. Best way to attract investors, Emmanuel, good question. Honestly, network. Family and friends is always good. So I've been borrowing money since I was 16 from people. But best way to attract investors, family and friends first. And once you build up, and I don't care what business is in, whether you're opening a laundromat business, a restaurant, family and friends first, have some success, build a portfolio, have the proof of concept. And then from there, it's easy to get outside cash, no matter what business you're in, right? So whether in Silicon Valley, tech, whatever you're doing, same thing with finance, just whatever business you're building, go with the family and friends first. I know Jeff Bezos went to friends and family first too, and look at Amazon now. Ash, good question. 17, Matt's amazing, man. Honestly, I wish I got into this game. You know what? You're going to be young, but you're going to be younger than anybody out there. I would say get your license, learn the game, shadow a few agents, talk to a few brokers, read as many books as you can. I've read like every real estate book out there, and, just take your time because you're going to be young. It's going to be hard to sell houses at 17 or 18, but give it a couple of years, you'll be killing it, man. Simon, land investment, honestly, it's too boring for me. Holding land just on speculation. You're probably better putting your money in Bitcoin. That's my honest truth. And this isn't financial advice, guys. I think I could get sued or something if you guys listen to me. How do you generate capital at the beginning? Like I said, family and friends is usually the best way to go. I built a pretty good relationship with investors out there. So, just network. The world's connected, man. You got Zoom. You got all these, you got people touching base with each other across the world now. A lot of liquid money out there. A lot of people have a lot of money laying around, and they might as well invest it in something safe like real estate. Best way to find leads, buying homes. Quang, nice for you to show up. You know what, man? I've been saying day one, I still do it today, and my guys do. We door knock, man. You see shitty singles in the house and door knock that house. You see lawn that hasn't been, cut, pull the title, find out who lives there, hunt them down on Facebook, man. You see a house collapsing, windows old, garbage everywhere, call them, find out the owner. They're willing to sell that place at the right price, right? Yeah, that's how they do it. And honestly, Winnipeg has a huge market for that. I think other cities do as well, but that's the best way to find leads, man. You gotta grind. People don't want to grind. It's like any business these days. Just push it as hard as you can, and eventually someone's gonna sell, and you build a reputation pretty quick that you're buying houses or whatever the case is. And then there's a lot of different things. I've seen a lot of people, do a lot of different things. I see online ads, I see, buy your house for cash, stuff like that. I haven't done any of that. But yeah, there's a lot of different things you can do. Hamid, yeah, good question. Appraisal and LTV. So high, you want the highest appraisal. Loan to value ratio is how much you can borrow on the appraisal. So if your appraisal comes out at 200,000, your bank or your lender says, hey, you could borrow 80% of it, or 70%, or 75% of it. That's the loan to value ratio. So like I said, the banks I've been using are between 75 and 80%. That's how much you can actually borrow off. Multifamily better than residential investment? Yeah, honestly, multifamily is probably better if you get a right deal. I've seen a lot of people get burned in that category too. Definitely, I've seen a lot of people make a lot of money. It's all depends on your goals, guys. Like I said, I've seen a lot of people, get into the multifamily game, and they're trying to sell it, or trying to get a REIT, like a real estate investment trust, trying to buy them out, etc. I keep it very simple with the residential stuff. I'm a very simple guy. I don't make things complicated for myself, and I also don't have experience on it. I don't really know too much about construction and the details of it. I know everyone in the city is building houses, or trying to build houses, or subdivide, or do infills, and it's a game I don't want to get into because they're trying to do short-term cash, and I never thought that way in my life, probably in my 20s, but now I think very long-term. I'm 10 years. I'm looking at 10 years, 20 years from now. That's just how I've always been. Shlomi, I love you too, man. It's great to glad you showed up, man. Carson, you know what? I don't really know anyone trying to build houses right now in this market. There's actually like infills, like I haven't even came across. I came across a couple of subdivisions this week, deals, and it wasn't for me. Now it takes so much time to subdivide a property. I don't think it's really worth your time, but Guggen and Abdul Rahman will help you guys out. Property manager find tenants pretty quick. Finding good tenants is another issue, but I would say a week or two you'll find good tenants. He boosts Facebook pages of the house. He does a lot of Kijiji stuff. He's solid. Honestly, I can't go wrong. His name's Sonny. Let me give you guys his number 1 second. Sonny's been doing this for a while. Just drop my name. Be like, Straz, call me, run all this shit, and he'll take care of you. But Sonny's great. And he takes care of everything for me, which is awesome. Go to lawyer. Private also. I deal with different lawyers. I don't think really lawyers have too much. Now, private investors is Mark. Like, there's a lot of private investors out there. Now, private investing is tricky. I've discussed this in the last webinar. They take some crazy fees at the beginning. You pretty much, if you want to get in this game, private investing is probably the only thing you can do. They take high fees at the beginning, interest-only payments. The interest rates are like 10 to 12% interest, and it's a 6-month term, so you're stuck in it for 6 months, even if you get rid of that property in 3 months. But you're going to have to be able to refinance in 6 months. So your credit better be good in 6 months, or you're selling it, whether it's a flip or you're building a house or whatever. So private investing, huge business. There's 1 billion private investors. I think that's what rich people do when they have so much money. They just lend it out and they take your house as collateral because they know it's never going to go down. So yeah, private investing. Mark, nice and good luck with Royal LePage, man. You'll enjoy the game, man. I try to keep it fun, man, with everybody. So I've built a lot of relationships with the realtors. So I've been doing this for a while. Corp versus personal. What's the benefit? Corp, you're paying a higher interest rate. How do I screen tenants? Honestly, Sonny does everything. My property manager, he does everything. So he's the guy. Medea, good question. St. Mary's, St. Anne's, those are good streets to demo a house because they're pretty much all zoned commercial, or could be zoned commercial. So yeah, St. Mary's, St. Anne's, good places to tear down houses, build commercial. Even I've seen people get away with commercial and multifamily in those areas. Not really my game, but I've seen a lot of people do pretty well for that type of living. When it comes to that, you probably just need to talk to the city planner for the area, whether you're doing any development, whether it's an infill subdivision. You want to talk to the city planner for that area, see what they would pass or what they would agree on, except for that land. There's a city planner for every area, and that's who you want to talk to first before you do anything. Nice, TJ. Sonny's great. I'm glad you met him. He's a good guy. Manuel, yeah, Lorenzo and Eric taught me this game. So they were the guys that were like, Straz, you're looking at things wrong. So I was flipping houses. I was doing all kinds of stuff. And Lorenzo and Eric were the guys that actually taught me this game. and I'm still learning from them, and I still go to them for help all the time. So, two guys that are 27 and completely destroyed the city. And I remember when they bought the first house with me and what they did, and it's just, that's where I learned it from, right? Any area is good to invest, Abdullah. It just depends on the house. It's all in the buy. I don't care if you're buying a house in the north end. If you get a good price, it's still a good house. If you're buying something in the south end, you could get screwed, right? So it all depends what you're buying the houses for. Right now, I'm telling you right now, there's no deals on the MLS. There hasn't been any deals like there were last year. And last year there was deals every week. Realtors were sending me deals every week. There are no deals. It's a seller's market right now. And I even tell my sellers to put it on the market and sell it because they're going to get top dollar. If you are looking to sell a house and making some cash, give me a call. Pre-constructions, honestly, right now, what buys and run, they're selling 1,600 square foot for 570 grand. Yeah, no, I'm not paying that. Yeah, I don't know. It's not even material costs. Material costs have come down. It's just now everyone's making money. That's really what it is. Yeah, Mark, you know what? You would probably want to talk to the credit unions. That's probably the best. Talk to the credit unions. Don't talk to banks. I think the bigger banks, they have they just have more issues when it comes down to lending. They have more paperwork. They look at other things. They don't even offset your current rentals. They look at that. They'll look at the ratios on that, which sucks. The credit unions will know. They'll look at your leases and say, hey, these are rental properties. You could carry more. Yeah, the banks are definitely protecting themselves, which makes sense on a bank's end. But yeah, everyone's kind of more cautious now than they were, in 2008, I guess you could say. TJ, how do you find investor? Family and friends is usually the best. And then, build a reputation. I've done a lot of seminars in person in the past. Like I said, even with my other businesses, I'm doing seminars. I got a big webinar tomorrow for Canadian Islamic Wealth. My partner's going to run. So different things that we do to bring people in. Even this webinar, I'll probably have 2 or 3 investors come up from this. Fortunately, like I said, I have no leads, and I'm trying to take December off. Well, last 2 weeks of December. Yes, good question, man. That's like the best question I've heard in a while. If they would negotiate on rates, I don't know. I would try to. I literally haven't. I'm just not that guy, but I probably should next time. Yeah, I definitely would try to rate, maybe show them other rates that other credit unions are giving. You probably could negotiate the rates down. I know banks do it all the time. If you give them another rate at some other banks. Cambrian Credit Union's been great for mortgages as well. Don't know much about the corporate side. Sonova, Cinnabon, Steinbach. I've used those guys. But even the big banks are okay. CIBC has been good. Scotia's solid for one of the big banks. I think they cap you out at 10 houses on your personal name. CIBC, I believe 5 houses underneath your personal name. So honestly, some of those big banks are solid. You just got to find good mortgage brokers and then, help them guide you through. Abdul Rahman, yeah, I would say 70, 80, 100K, depending on the house. If you find a house, like I said, you find a house at 300,000. There's a couple good ones recently, North K, that a couple friends picked up. One guy picked up a house that's worth 340. He picked it up at 280. He was telling me about it today, and I was like, it's a good deal. It all depends on the house and the amount. I've seen guys do this with, not the burst strategy, but flip houses in Tuxedo, 700, 800K range, dump 200, resell for 200K profit. So every house is different depending what you do, what type of renovations you do. Keep that in mind. If the house is right, the house is right. But it's been tough. Like I said, this year has not been easy finding these deals. Now we're all looking at, different cities to find deals, but honestly, it's a North American thing. It's just tough. And a lot of guys are doing it. It's not just me or my investors. I could tell you everyone's doing this strategy because it's, like I said, it's probably the best strategy out there and with the less headaches. Stay away from condos. Like I said, if a condo deal makes sense, I would do it. You get a steal on a condo. There's a 1,200 square foot condo in Bridgewater that went, it was a bankruptcy like a year ago. I tried to buy it because I thought it was a steal, right? So someone else ended up buying it. But there's always a steal there, man. There's always condos. If something happens, someone needs a quick sale, you could do it on it, like no problem. You just gotta make the numbers work because of the stupid condo fees, and condo fees are no fun. I've been doing these webinars like once a month. You go to my YouTube page, which I'll send here. There's a few there, some other videos. Subscribe to it, guys. I just jumped onto the YouTube channel. My nieces were so happy. Like, you have 100 subscribers. You're famous. I'm like, I didn't even know that was good. But yeah, there's some old webinars. There's some videos. I'm posting a video in a couple days. Shout out to Prolix Media, who've been helping me out with a lot of my marketing stuff. Royale, my brother's actually a mortgage broker. They're solid too. It all depends on who you're talking to. When it comes to rates, to be honest, I don't really look at that. I look at the mortgage bank lender that's going to let me pick up as many houses as possible. If I was only trying to buy 1 or 2 houses, for sure, I'd be looking at rates. But I'm at the point where it's like, hey, are you guys going to cap me out on houses? Because I want to buy like 1 billion. And are you guys going to allow me to do that if I find the leads, right? So I think that's where you want to get to. That's what I'd be looking into. Now, if you are buying for your own personal sake, 100% shop the rates. But if you're trying to get into an investment game and you're trying to scale and do volume, look at it differently. But for sure, if you're only doing 1 or 2, shop every rate out there. Every rate out there. Bankruptcy properties, and is it worth it? It's a good question, Imran. Honestly, it's not really worth it in Canada. We don't have those things called fire sales like they do in the States. Way more opportunities in the States. The bank here is trying to make their money. In the States, there's like 20,000 lenders, and they just want to get rid of the properties, right? Yeah, the bank usually has the reserve. I haven't really seen any steals on foreclosures, to be honest, ever. Like there's been 1 or 2, and I'm like, oh, that's a good deal, but I haven't seen what we call a fire sale like you see in the States. You can always go to the auction, which is somewhere on Ellis, I think it is, and there's opportunities, but I haven't really seen any steals, man. I think everybody wants to everyone wants to get their most money out of these things. Simon, good question. I should start charging these things, man. Honestly, I do this just to teach people. I enjoy it, meeting you guys, and also it helps my business at the end of the day. If you guys like me, hopefully you guys send me some business, some buyers, some sellers, your family's trying to find some investors, whatever it is. But just get familiarized with me, and then obviously it's information. I don't think I need to charge for this. You could YouTube and find the same shit, right? So I've had people ask me that I should be charging. I just don't think I wouldn't feel right charging for this. It's been an hour. It's been fun. You guys ask good questions. DS, that's another. You're asking good questions. DS, it's the guy today or girl, but you're asking very good questions. I would recommend sharing your receipts to the appraisers as well. So comparables, receipts. I'll even tell them what companies did it. Even give them the company's name. Be like, hey, if you could bump this up, what does my contractor need to do? Get them on the phone. Hey, do this, do that. Very good questions. Never really thought of doing that. And once again, I apologize for coming in late. Sorry, guys. I suck today. Oh, wait. We're going to do a draw. Sorry. All right, guys. So person who wins the $50 gift card, forgot to add that. Someone's winning a $50 gift card. And I'll be in touch with them in this week. Christopher David. Yeah. Christopher David wins a $50 Visa gift card, and I will be in touch with you. We'll be in touch with you this week, and we'll get that in the mail. All right, guys, it's been fun. I'm not doing this until January. I'm taking the last 2 weeks off of December to enjoy life a little bit. But if you guys need anything, contact me. You guys have my contact information. The people that called me and I never answered, just text me or I'll call you guys tomorrow. And it will be on my YouTube page at the end of the weekend. It'll be up there, hopefully. All right, guys, it was fun. Thank you for joining, and we will chat soon.